access to finance is a challenging barrier for SMEs in underserved communities, particularly those owned or led by women. Working with local financial institutions, Advanced Global Capital provides fair and flexible access to capital for SMEs so they have the credit they need to sustainably grow and develop their business. I'm joined here today by Sudha Baradia, co-CEO. Welcome, Sudha. How are you?
Thank you very much. I'm fine. How are you doing?
Very well, very well. Now, just to begin, can you tell me about the genesis of Advanced Global Capital and why it's so important to deliver flexible capital to SMEs in underserved markets?
Sure. So globally, there are about 65 million credit-constrained SMEs, particularly in emerging markets. Our mission at Advanced Global is to get working capital into the hands of those SMEs because they need that short-term working capital to be able to buy their next set of raw goods or make payroll, pay their taxes, that kind of thing. And that's the end of the spectrum where SMEs struggle with access to cash. The important thing about our flexible funding is that it's funding against receivables. So for example, invoices. And we're discounting invoices and providing flexible and fair financing right into the hands of those SMEs.
And can you just explain to us, what prompted you to apply a gender lens when you were assessing the merits of supporting different businesses?
So women-owned or women-led businesses, particularly in emerging markets, struggle with access to finance. In those markets, if the banks are even lending to SMEs, you'll often need to have title to assets. And women-owned businesses, particularly in EM countries, will struggle to have title to assets to pledge. So invoice discounting is a particularly fair form of financing because if she has produced a certain good or provided a certain service, there will be an invoice that's raised. She can wait for her buyer to pay, or she can go and sell that invoice at a discount today and get access to the cash that she needs. And in that sense, it's not a loan. It's a product that you can choose to use or not use. And sometimes these businesses can be seasonal or cyclical. There'll be certain points in the year where invoice discounting makes more sense for them to use, and other points in the year where simply they can wait 90 days for their buyer to pay. So it's flexible, it's their choice, and the power is in their hands, really.
You mentioned flexibility there. So flexible, tailored financing, I think it's key to your offering, isn't it? Yes. But sometimes that can mean that the transaction sizes are very, very small. But why are these deals still important to you?
SMEs, just by their very nature, are small businesses, so their transaction sizes are not going to be very high. About 90% of the transactions we fund are less than $5,000, which is an important metric to assess because then that the money is going into the correctly sized SME. From an investor point of view, it's very important for investors that are motivated by impact to know that their money is constantly recycling. It's impact over and over again. So if you have whatever size investment you have, a $5,000 invoice is going to keep on regenerating. So the impact of your funding is just that much more, which is much more meaningful, I think, to an impact-oriented investor.
Now, as I understand, you've already focused on South America, Eastern Europe, the UK, and the UAE. Where's next for you when it comes to expansion?
So those markets, invoice discounting or factoring is a very well understood product. SMEs build it into their business model. They know how to use the product. In some other countries, such as Sub-Saharan Africa, invoice discounting is less well known. The important thing for us is that there are other types of working capital sort of products that SMEs need. In Sub-Saharan Africa, short-term working capital loans are more the flavor of the day. And so we are expanding our offering, to those SMEs in those countries.
Are you seeing more generally a trend away from investing for financial returns only? Might investing for additional factors such as positive environmental and social impacts become the norm in the future?
I think there are still institutions out there that are offering only financial return type products, and I guess there's a world for that. Impact-oriented ESG funds, there's a lot more noise around that now. You will hear funds or financial institutions telling you that they have this ESG screen or this kind of impact screen or whatever it is. I think there has been, again, a little bit of greenwashing where people are just sort of deriving impact or ESG from the thing that they were already doing. The important thing about us is that, our mission was to support these SMEs with their working capital. We didn't start with the financing first. We started with the mission first, and that's quite important. So for boutique funds like ours, impact is so authentic. It's right there in the DNA. It's not something that you put in as an overlay over the top. And I think that's important to distinguish between genuine, true impact-oriented strategies and ones where, impact is being derived out of something that was already being done, if that makes sense.
It makes sense. Sudha Baradia, thank you so much.
Thank you.